Now, the oil and gas industry has realized that it must get leaner and smarter and learn from other industries in order to survive low prices. A new report by DNV GL, technical advisors to the oil and gas industry, says cost pressures are pushing down supply, affecting jobs and, of course, infrastructure projects. Oil prices, of course, tumbled 3% on Monday, dragging the dollar down, but the world stock clung onto gains in a possible sign of stabilisation after a horrendous start to the year. Now, the report says that there is a substantial risk of a slow recovery in oil that would compound the stress on firms already hurt by a 75% drop in prices since June 2014. Now, ratings agency Moody's announced on Friday that it had placed 175 oil, gas and mining companies on review for a downgrade. And of course, commentators say that OPEC and non-OPEC producers need to work together to tackle oversupply in order to prop up oil prices.
If you remember, before the downturn, we had historic highs of prices and we had historic levels of investment for almost 4 or 5 years. So that means there's a lot of production coming to the market. At the same time, on the demand side, we had hoped the global economy and China would be growing double digits, but in reality, that demand growth has slowed down. So what you're seeing is really a continued oversupply in the market, a weakening in demand, and that's going to keep pressure on prices down. I think any time you see a downgrading, you're going to see pressure on the share prices, and that's going to lead to the actual equity value of these companies being lower. That means in proportion their debts are going to be higher. At the same time, their cash flows are squeezed to almost 1/3 of what they were having a year ago. So potentially that's going to be hugely challenging for those companies. And I think we're going to see probably a spate of mergers and acquisitions where you see companies merging together so that they can actually have a lower unit cost production, lower cost base for increased production.